Welcome to the Daily Market Wrap for Thursday the 9th of July. Jack, overnight, so President Trump has declared the ceasefire with Iran is over, probably for the fifth or sixth time. What are we seeing on the back of that announcement?
Yeah, so there was obviously Iran attacked the oil tankers over the weekend. We saw the market didn't really have much of a reaction to that. However, speaking at the NATO summit in Turkey, Trump has announced the ceasefire's over. The US have launched strikes against Iran 2 days in a row. And obviously the market's now had a big reaction. So the last couple of weeks has been sort of an optimism about a smooth path to sort of lasting resolution. This has been a reminder to markets that it's sort of far from over. So oil prices spiked, equities have come off, and risk is sort of starting to be taken out of the market as investors sort of cycle towards more defensive assets.
Okay. Trump has singled out Spain for not contributing more to NATO in regards to their defence spending. Can you just tell us a bit about this and what possible actions there may be coming out of the back of this?
Yeah, so Trump's sort of been very heavy about nations increasing their defensive spend. He's sort of put a 5% target for their total GDP to be spent on defence to hit by 2035 to reduce the reliance that they have on the US, the European nations. So far, Spain's been the only one to not commit to that target. And so he's basically spat the dummy and said no one should be trading with them, no one should be visiting them, talking to them, or anything like that. Spain's economy has sort of taken a little bit of a hit. Their stock market, their bonds have dropped as a result of that. What pressure that puts on European equities, we'll wait and find out. But it's sort of just a reminder that Trump's sort of keeping his allies close to him and sort of disparaging anyone that sort of goes against him. So it's probably more the geopolitical ramifications and the relationships between world leaders that's going to be impacted by this.
Okay. And the Fed officials meeting recently went down. Can you just tell us about the FOMC and what it means and what the gathering is about?
Yeah, so the meeting minutes have been released from the FOMC meeting. So the Fed meets for 2 days to decide the rate decision, and these are the meeting minutes from that gathering. What it highlighted was, although they reached a unanimous decision to hold, during the meeting, the officials are actually split on what to do. Some calling for an immediate rate rise and others sort of calling for a hold. But the overarching theme was that inflation is still the main concern, and there's a lot of concern about rising inflation, and so that sort of will just support the hawkish narrative that a rise is more than likely than to not to happen towards the end of the year.
Okay. And when we see those meetings come out with some disparity between them, I guess, what impacts can that have across the currency markets?
Well, it changes the narrative to what the outlook is. So if people expected it to be a hold straight away and sort of a general increase later on, they'll react accordingly. Whereas if this comes out and there's a surprise, they could have hiked it straight away. Obviously that moves the narrative to a more hawkish stance, which will support the USD, and you can see increases in that from a technical point of view.
And some data coming out today. So Chinese CPI getting released in a couple of hours.
Yep, so the Chinese inflation figures will drop shortly, looking for a small decrease from 1.2 to 1.1%. Obviously the market's priced that in. What we'll be looking for is surprise either way. So if it comes in softer than expected, the Chinese currency will depreciate.
Okay. And then tomorrow we've got the German and Canadian CPI and unemployment figures coming out.
Yep. So bit of a quiet week on the data front outside of the Fed minutes. So German CPI will come out tomorrow, expected to hold steady, and Canadian unemployment also expected to hold steady at 6.6%.
Okay. And 6.6%, that seems reasonably high. Is that high compared to the rest of the world?
It is high in comparison. It is actually a little bit lower than the last years in Canada, but certainly compared to the US and Australia, it's a couple of percentage points higher.
Okay. And as you've mentioned earlier, the talks coming out of Iran have caused the oil prices to spike up. Once again, we were talking just the other week that the markets are, becoming less reactive. But I think when it's news, that's quite definitive, such as that with Trump. We definitely still just see these moves very quickly, jumping straight back in.
Yep.
And similarly for the Dow Jones, so coming off the back of that announcement.
Yeah, equities don't like increased risk, so investors get a bit jittery when something like this happens, so they'll rotate out of that. Like energy stocks will rise, but things like tech don't like this stuff, and obviously tech makes up a big portion of US equities and their indexes, so investors will rotate out of the safer assets.
And the Canadian yen, tell us about this one.
Yeah, so obviously we've spoken about the yen weakness over the past few weeks, but with the rise in oil prices, that naturally leads to a rise in the Canadian dollar. Oil is Canada's largest export, so they're very intricately linked. So generally you will see traders trading the Canadian dollar as a proxy for oil, so strength on the Canadian side, weakness on the yen is pushing up that pair.
Okay. What sort of percentage of oil is coming out of Canada compared to, say, some of the regions in the Middle East?
Oh, off the top of my head, I'm not too sure. It's more just the percentage of Canada's GDP derived from like a single commodity such as oil, which means the price is pretty closely linked in terms of what it on the global supply level. I'm not too sure. Yeah.
And back to gold, which is obviously a really big symbol here at Eightcap. So I guess over the past few days, gradually coming down, but some big movements along the way.
Yeah, so the Middle East shock did take a lot of sting out of gold and cause it to drop down. Again, just investor fears rotating into safe assets.
And the chart of the day, so the dollar CAD. Tell us about this one, Jack.
Yeah, so we just talked about the Canadian dollar being linked to oil, but this is a chart looking at the dollar CAD for this year, and we can see there was a key sort of inflection point where resistance turned into support. We can see at the start of the year, it tested that blue horizontal line. It tested it again at the start of April, sorry. And then last month, at the start of last month, it actually broke through that resistance point and it's turned into a support level. And then we can see over the last week or so, there's been a consolidation up the top. Now, what the conflict will do is interesting. At the moment, the US dollar strength is outweighing the strength the CAD's deriving from the oil trade, just because of how hawkish the Fed is and how much demand there is for the US dollar. So that's overriding any of the CAD's oil support. But we can see over the long term, there's been a clear bullish shift. Prices well above the 50, 100, 200-day moving averages. RSI has cooled from the overbought levels, but there's not enough of a negative shift, so it's just sort of more of a cooling rather than any correction. So we can see that consolidation is sort of the market taking a bit of a breath, but it's still looking relatively bullish.
Okay. Yeah, it'd be interesting to see how that relationship continues as the conflict goes on. And the article of the day, so Apple commits $30 billion to Broadcom for a chip-making push.
Yeah, there's plenty to read about the NATO summit if you do want to explore that and Trump's latest comments. But I think obviously the AI story is very pertinent with global markets. So this is looking at Apple's relationship with one of the big chip makers in America, and I think it's one of the largest manufacturing deals in history of chip manufacturing in America, and how it ties to big tech. So it's the AI big tech link.
Okay. Nice one, thank you. Questions from you guys?
From a business point of view, does the overnight news change anything in terms of trader behaviour today, affecting more activity?
Yeah, I mean, typically, typically when there's big announcements, we start to see a lot more volume coming through, and quite concentrated around those announcements, as well as the kind of lead up into them. So it does mean for the team here in Oz, like a lot of the times, the really big announcements are happening, in the London sort of time zones. So they cover most of that, but no, it's definitely probably the time where the guys have to be the most kind of alert and switched on around those periods, because it's just the sheer amount of volume of trades come through. It's sometimes difficult to kind of weed out what's actually going on. Cool.
Thank you.
Thanks, guys.